GEV just launched more than 1,562%. And my people, this is not a stock. It is a small industrial coat rocketing out of gravity today. Welcome to Dayrade Daily, where we surf this lunacy for day trades, not for therapy. So smash like and subscribe before GEV re-enters atmosphere without you.
Bro, GEV opened and my heart rate went straight to raid boss mode. Spread went full chainsaw and volume was like Chad during peak meme season. I scalped the first reclaim and now my wrist is still vibrating like a broken alert window.
A 1,562% candle in an industrial name. That is not a trade, that is a career hazard. Jet, you do not marry those you flirt. Near VWAP, then leave before the restraining order candles show up.
Structurally, GEV is just a low-float industrial, with surprise contract news plus algos panic chasing in a tape where realized volatility is running almost 7 times normal. So, for intraday traders, that is pure opening range breakout territory, and then probably hands-off once the range goes fully vertical.
Hands off, or hands all over. If you are my community, my people, GEV was the prophecy, signal of a bullish day. We have rockets, and industrials, tech, even random basements. So yes, this episode, we are dissecting the whole launch pad and giving you levels, entries, and the emotional damage tour.
Speaking of Orbit, SATS won more than 1,116%. Satellite stock doing literal space cosplay, and FinTwit lost its mind. I tried an opening drive scalp, and the spread immediately tried to evict me from trading.
SATS was not cosplay. It was a liquidity black hole. Gap that huge with chat screaming. Moon means you either buy the first tight flag off intraday support, or you sit patiently and let someone else donate the lesson fee to the market gods.
Nah, SATS was destiny. Communications sector. Summoning memes from orbit. The social feeds went full religion about space internet. So as long as that first 5-minute candle held its low, my people, that was an opening range breakout with divine backing.
To be fair, the underlying story was a real capacity upgrade, plus shorts squeezed by that news. But after a move over 1,000% intraday, you transition from breakout land into blow-off risk, where fading the final spike only works if you respect tight stops and accept you might be wrong instantly.
Tight stop, sure, I set one, and SATS teleported through it. My fill showed up like a history documentary. Trading tip: if your stock moves faster than your alerts, you are not investing. You are role-playing a speed bump on the tape.
That is because you insist on scalping everything like it is a video game. In these hyper-bullish sessions with silly volatility, you pick 1 or 2 names like GEV or SATS, execute your plan, and then go emotionally flat. Not 12 tickers plus 20 regrets.
Listen to Grandpa Risk over there, my people. But he is right. For once. If average volatility sits near 687%, you do not need quantity of trades. You need quality. Set your levels the night before and wait for the chosen candles.
Speaking of chosen candles, ASTS ripped more than 853%. Space cell towers just beaming stop outs into my account. I chased a midday reclaim and instantly learned what parabolic exhaustion means in real time.
AST Space Mobile actually had a narrative earnings beat, plus partnership chatter, plus the usual retail hope that it becomes a space telecom giant. But intraday that pattern was textbook gap and trend until midday, then a nasty failed breakout, front-run by whoever watched order flow instead of tweets.
Translation for Jet. You buy near the morning high or low or first VWAP touch. You do not chase the third spike when everyone in a certain forum is posting rocket pictures. That is not edge. That is public confession.
Okay, yes, but my intuition screamed, this is the one. which is what my doctor also said about my last energy drink. So maybe my internal indicators need serious backtesting.
Intuition is fine, my people, as long as it shows up near structure. ASTS had an early flag you could buy against a low risk define, and when it extended 800+%, you scale out. No diamond hands inside a 1 minute parabolic. That is not bravery. That is cardio.
Also, just to sprinkle some macro here, this whole space cluster's SATS, ASTS, RKLB is basically the speculative frontier for this cycle. In a bullish regime, capital runs to narrative-heavy names first, and the tape tells you when that party is risk on or risk off if you watch correlations.
Rocket Lab RKLB up more than 765% today. That is not a lab. That is a launch simulator with a tax form. If you are short that gap, you are volunteering as crash test dummy.
I tried to short RKLB, just a tiny nibble on a failed breakout, and it instantly squeezed like it heard me click. That was a straight opening drive trend day. I should have been buying first pullback, not arguing with trust.
Jet, you tried to fight an industrial rocket on a day GEV already showed you the sky map. Conspiracy brain says the algos literally sniffed your sell button, my people. Trading tip: never be the first genius to fade a chart that just printed new lifetime intensity on volume.
For RKLB, the intraday structure was pretty honest, though huge gap consolidation over opening range high, then a measured second leg. As long as price held that prior breakout line, dip buyers were correct. Fading only started making sense once it stalled and volume finally cooled.
Translation again. You wait for the party music to stop, not when the first song hits chorus. Think of it like Orin's elite fancy school dances. You do not scream last call when the band just tuned the guitar.
I mean, we did have string quartets, not bands. But yes, your analogy works. And also hurts a little. Emotionally expensive, but directionally accurate.
Wait, you had string quartets at school? That explains why you treat WDC like a symphony instead of a storage stock that just exploded more than 732% on earnings. You hear violins, I hear short cover screaming.
Western Digital, my people. That move was glorious. Big earnings beat, plus guidance surprise, and the whole tech sector in a risk-on mood. Also, every options degenerate piled into calls. WDC was a clean gap and go. With textbook VWAP bounces, you could trade like a highlight reel.
Unlike the space junk, WDC actually trades with depth. You could buy that first reclaim of pre-market resistance, risk a tight stop and then scale into prior daily levels. No need to romanticize it. Just solid tech momentum.
Plus, WDC benefits from the whole storage cycle optimism narrative. Pricing power improving, and everyone betting on data growth. So, on a day like this, when sentiment is broadly bullish, it becomes a natural institutional long, and that intraday trend tends to be smoother than the meme rockets.
Smooth for you, maybe. For me, every pullback looked like the end of civilization. But yes, WDC was actually scalp-friendly. Staff respected intraday support, like it had boundaries. Wild concept.
And while big tech strutted, the micro beasts like SNDK and SAIL also jumped more than 611% and more than 573%. That is your reminder. This market is not just bullish. It is borderline musical theater with semis and cyber singing duets mid-session.
SNDK going more than 611% was the market saying, hey, remember storage vintage edition. Intraday it was gap up, then tight flag, break, clean scalp, if you respected the widespread. Otherwise pure nostalgia-based tuition.
I liked SAIL more structurally. Cybersecurity with a heavy short base, plus real revenue beats. You got that early reclaim of VWAP after the opening spike, which is one of my highest probability continuation setups in this kind of tape.
I tried that SAIL reclaim too, but I sized like a goblin and bailed on the first tiny red candle. Trading tip: if your position is so big, a 3-cent wiggle feels like a life event. You sized wrong.
Facts, my people. Risk is a percentage of a count, not a dare. If you are flexing size, screenshots, but cutting winners instantly, that is not edge. That is cosplay. Please just like the video instead. It costs less, and your broker will thank you quietly.
While you clowns chase satellites, boring names quietly printed too. Dow up more than 64%, AIG over 60%, APG almost 600%, CNM more than 706%. That is old school rotation into industrials and financials.
Exactly. Dow catching a materials bid tells you about reflation hopes. AIG rallying signals credit fear cooling, and APG plus CNM screaming higher shows infrastructure bets. For day traders, those gave cleaner pullback entries than the wild space stuff, if you like sanity over fireworks.
Cleaner, yes, but chat does not spam emojis for CNM. They only wake up when something moves 4 digits. So I scalp the drama and then hide in boring trends when my hands shake. It is my personal volatility hedge.
That is the rotation game, my people. You let the space choir grab attention while you quietly harvest Dow and APG flags. Cult leaders love boring money. It pays for the flashy thumbnails and Jet's inevitable stop-out montages.
Speaking of quiet killers, NVO up almost 58% on the day. Boring healthcare to most. But that trend intraday was a slow escalator. You buy first, higher low, trail a stop, and then go contemplate life choices instead of heart rate spikes.
NVO is riding the whole metabolic treatment story, plus earnings momentum. Not sexy, but institutions love it. And when big money loves something, your intraday plays become flags and pullbacks, not circus tents.
I tried NVO once and fell asleep mid-trade. Woke up still in profit and thought, is this what responsible adults do?
Responsible adults also like and subscribe to keep this circus funded. Every subscription adds 1 milligram of caffeine to Jet's bloodstream and 1 tiny therapy session for my risk management guilt.
No amount of caffeine fixes your conspiracy habit. Speaking of which, you promised a theory about why all these industrial rockets, GEV, RKLB, APG, CNM, ignited on the same day. Enlighten the children.
Glad you asked. Clearly, there's a secret infrastructure cabal running a spreadsheet with moon phases. They rotate capital through low-float industrials whenever Mercury retrogrades near employment data. So retail chases GEV while they unload Dow and APG with zero stress.
Or, and hear me out, it is just rate expectations shifting plus fiscal chatter. But your version does sound like a more entertaining white paper with worse citations.
I like Toro's version better. Can we blame Mercury when my stop gets hunted? Feels nicer than admitting I chased an exhaustion candle on ASTS.
Sure, blame the planets. Just also blame yourself in your trading journal, or you will repeat the same circus next time. Average volatility spikes. Astro excuses do not fix P&L.
All right, lightning round, my people. Predictions time before we log off this madness. Starting with GEV. I say if this thing holds half the move tomorrow, it becomes the unofficial mascot of speculative industrials, and every tiny warehouse stock tries to imitate it.
My turn. SATS prediction. It opens with another monster gap. Reddit renames itself Satellite Chat, and every candle is just a meme poll. yes or yes. But actual trade is fading the third spike of the day, when emoji volume finally dips.
ASTS future in my book. Half the crowd treats it like a religion. Half get margin called. Either way, tomorrow real edge is waiting for a proper higher low or a failed breakout. Stop pretending you are a prophet on the first tick.
For RKLB, I predict a classic day 2 pattern. Early trap for late longs, then either a measured secondary trend or full rug, depending on how serious that institutional interest really is. Watch VWAP and prior breakout levels, not your feelings.
WDC prediction. It becomes the chill backbone of this whole tape, my people. While everyone stares at space junk, this thing just grinds higher. On earnings respect, buy the civilized dips and let your adrenaline come from the satellites.
I will go rogue NVO turns into the unofficial retirement fund of meme traders. They blow up on ASTS, then crawl into NVO for slow redemption. Intraday, we just ride those com flags like therapy sessions with trailing stops.
My broader call next week. Volatility stays insane, but leadership rotates. Whoever chases leftover GEV or SATS peaks gets smoked, while quieter names like APG, CNM and AIG hand tidy trend days to the patient. Chase fireworks or choose paychecks.
And final nerd note, I think average volatility staying near 687% means discipline becomes alpha. Traders who take only 2 or 3 structured setups per day will absolutely crush the over-click crowd. Boring process beats exciting chaos over any sample size.
That is the show, my people rockets, storage boredom, and everything between. If you learned one tiny thing, hit like, drop a comment with your wildest trade today, and subscribe so we can keep roasting Jet's heart rate every morning. Seriously, subscribe now before Jet chases another exhaustion candle live.